All right, everybody. Happy Monday. Welcome to an Ask an Analyst session. This is Chris over here, joined by my good friends and co-hosts Gary Fickhart and Tyson Clayton. We are pushing live on YouTube. Recording's underway. Let me go ahead and say hello to everybody. Happy Monday. It is July 12th. And Tyson, Gary, wave to the good people out there watching us.
It's good to have the three amigos back.
I know. It's been way too long. It's been way too long.
Yeah.
We are back.
All right, so we are back in action. Lots to talk about today. So we're going to go back and forth between a couple of charts ourselves. So we kind of have the talking heads cameras where you can see us and say what's happening. Feel free to ask some questions. And I know that we're planning on bringing back the three of us, maybe more, and doing this Ask an Analyst session with a lot more excitement. Gary, I know you've got some big plans for us, possibly involving some soundboards and some some sound effects. Some fun with that. But I want to get to it. It's going to be an interesting week. Look, we're trading in the middle of July. Market doesn't seem to be too much disrupted. I'm still looking at some dollar strength continue. Stock market continues to kind of be path of least resistance. We had gaps lower that were fought back. S&P closed at new highs. NASDAQ closed at new highs. Dow's fighting off high. I mean, the market just can't be stopped. We still see some drifting. Gary, I want to open it up to you. It's been a while since you've been on AAA. What's your overall consensus going on right now in the Forex land? What are you liking?
Well, what I like about is that, yes, just like you said, we're getting some strength in the dollar, and that's great for a lot of my positions that I'm holding on US dollar Canadian. So that's been good. But more importantly, I think we need to take a look at the calendar this week. And if you take a look at the calendar, we got a lot of news coming out this week. We got the rate decision for the New Zealand dollar this evening. We've got Bank of Canada rate decision coming out on Wednesday. We've got Bank of, let me see here. I think those are the two rate decisions. And then we've got, I believe, something else coming up on Friday. Bank of Japan press conference coming out on Friday.
Right.
So we've got a lot of data coming out. Obviously, a lot of pressure on the Feds to make sure that they make this transition between raising rates to keeping the rates the same. They're going to make sure that they keep that at a steady rate so that they don't create any panic in the market right now. And with this being said, with the Feds already talking about the possible hike of interest rates coming out this year, even though I said I don't know if it's gonna happen, but if it does, it's already starting to spike the market up, giving some dollar strength, because anytime they raise the rates, there's obviously going to be an increase in the currency that's been affected by that. So that's what's looking really good right now that I'm focused on. And there's a lot of short-term opportunities. I mean, we've been in a sort of a sideways trend over the last, I would say, the first 5 months of the year. But then it's really been breaking up. We're getting these big, long stretches on a lot of these currency pairs that have been creating great opportunity. Now the question, I think, Tyson and Chris, is what strategy are we going to use, right? Because now the markets are changing. The volume that we've seen over the last 5 months, we're starting to see a change in the volume of the last couple of months. And with that being taking place, what are we going to do with the strategies? What are we going to change strategies? Are we just going to change the parameters within our strategies? That, I believe, is going to be key. And I'd like to hear from you guys. What are your thoughts on that?
Yeah, I just real quick, and I'd love to hear you guys' opinions on this. So I am in this, we've been on this theme for probably about a year and a half now. Volatility. We've been right. Volatility spiked up with COVID. It stayed high. I think volatility is going to continue to be high. But here's what I'm not convinced of is any, except maybe in the stock market, I'm not convinced of any prolonged, aggressive, sustained move. So therefore, range-bound strategies, overbought, oversold strategies, but looking for extremes. So as an example, in like the Aussie Swiss long is one of my favorite trades, but not long-term, right? I'm looking for like a week or two move higher and then followed by a month or two lower, then a week or two higher. So I think it's going to move in waves, but it's going to be volatile waves. So it's going to be opportunities for people that are strategic. And I love what we're doing right now, but I'm not sure, Gary, Chris, I'm not sure if we can get super aggressively directionally focused, but we can make a lot of money if, like, for example, I think we're going down. Aussie Swiss, I'm bearish on. I think we have much further to go down, but the next 1 to 2 weeks, I think we pop up to that trend line. What do you guys think?
I like that. Gary, you're our wave count expert here. So what do you think of this? something like this, if you can see my screen, what do you think of the outlook of Aussie Swiss actually finishing there in the next 6 months?
Take the high that take that first swing to the up, right, and draw a horizontal line going on that high.
Yeah.
So that is key right there.
Right.
If market breaks through that, then what we're heading into is what we call an irregular flat, right?
Okay.
So which means its price is chasing after the low of that swing, which is that one right here.
Yep.
So if we break below, I don't know what that value is. If you can just get a sort of a value on that.
So we have the high here right around 67.35.
Yep.
And then
if we break below that, then be bearish towards that low. If we stay above there, I agree with Tyson. Look for all counter trend line breaks to the upside, or buy on any strategy that you're following, and just go ahead and continue to trade it towards the D extension, which is the 1.618. Always on a wave one strike, you're looking for a 1.618 target. So draw up a fib from that high to that high, low to high. Yep, that's it. So we're chasing after, I believe it looks like 75.83. Is that right?
Yep, 85, correct.
Would you be conservative on this, though? Just to go back to, so the volatility, so could we see a spike up to the trend line, a flush back down to 64, then a spike back up to 70? You see what I'm saying? So could ultimately, I agree 100%. I think we're going to maintain that 64 low. We're going to head up to that 76 level, but the volatility spikes up and down to get up there could be pretty wild. And so I think the idea, my idea is be a little bit more nimble on a week by week basis. And so I'm bearish, maybe down to about 65, bullish up to 76, but let's decide to ride the waves when we're supposed to ride them up. And for the next week or two, let's ride them up. When we're supposed to ride them down, let's ride them down. I'm not comfortable enough, and I'd like to get your guys' opinion. So with this, there's more money. So let's say that we just hypothetically put a trade in and we said, oh, I want to put a stop at 64 and a target at 76. I think there's a high probability that trade plays out.
Sure.
But is that a better way to do it than being strategic and saying, okay, well, I'm going to be more aggressive on the upside because there's more money to be made on the upside, but I got to take advantage of the downside pushes also. What do you guys think of riding the waves in between as you take more of an aggressive bullish stance as long as we don't break 64?
Well, I think that, right now it's like, if you can see the channel that I have drawn here, it's like, look, as long as price kind of remains structurally within here, like we could have like this, low volatility, but channel obedient move. And look, I would say that if we have a reaction off of 67.35, then I'm looking for channel confirmation, and then we proceed bullish. If we break, just like Gary said, if we break below 67.35, then we start to stay inside the channel and just plan on this thing going down into this area. And maybe it's faster. Maybe it's faster than what I'm drawing out here. But the way I have the structure identified now, it's like I would be bullish off 67.35 if price can respond to that level and go bullish. Otherwise, if it breaks below, we start looking for support levels. The easiest way to trade this, if you want to be bullish, is wait for this channel to break. Because until you have that confirmation, this could just slowly keep staying in this bear channel, in this corrective move right now.
And I want to put that in perspective.
Gary, would you take profits? Like if you buy right in here or down towards that 60, would you take profits near that 70 bounce?
Well, I think it's what's important right here is that the first thing we've got is establishing support and resistance based on this large time frame and getting sort of a directional bias too. Chris, can I share my screen? Could you?
Well, yes. Go ahead and bring it up. If you want to complicate it, let's try.
No. I think it just replaces it. It just replaces yours. You need to stop yours.
Go ahead. Yep, and I'll switch over to that.
Perfect. I think it's on the same screen, so I think we should be good.
It is.
Okay, good.
Okay,
all right. All right. Just teaching a little bit about technicals too. No, I'm just. So this is the thing right here. And what's important right here. So we've got, and Chris, by the way, I've got the same channels in just like you did, and I drew in that wave one structure right here. We've got that low, and I've got that set up there because I know if once we get out there, wave two target will be down here, taking out the low there at 63.72, right? So Tyson, to answer your question here is how I would address this is. Now I start thinking about more intraday moves, right? I've got that channel. I've just got to update my channels down here. So I've got my channel lines here. So what I do is I look at this and I need to get a filter now. So I've got the Aussie Swiss franc. And if I'm looking at the Aussie Swiss franc, now I think the most important thing is, and I think you hit it on the nail there, how much volume do we have moving down? How much volume do we have moving up? Does the market go into range? And everything goes back down to currency strength. Which currency is getting stronger than the other one, and then which one is creating that opportunity for us? So what I do is on this, I go look at my currency strength dashboard, and there's, at the moment right now, you can see Aussie Swiss says bearish. Right now, this is the weekly encapsulator. This is the weekly setup. So now it tells me Aussie Swiss bearish. Now we can see here we had a bit of a correction move, so which means that there's possibly going to be a bearish move further down south. That's going to be something like this. And I've just gone in and pushed the wrong button right here. Man, shows you when you're starting to, let me just go ahead and grab this again. So what we're looking for is possible correction and then a further downside move. Remember, this is a weekly setup. So when we're looking for a weekly setup, the market's going to do something like this. Man, hold on, my market. Okay, I'm going to use this rather. It's going to do something like this, where it's going to go up, and then it's going to come back down again. So we know that this is going to be a level of resistance. So when I'm looking at this dashboard, I'm saying, okay, it says bearish for the week. So that means that I need to sell on resistance, sell on overbought conditions, sell on anytime the market go ahead and have this little bit of a rally. So what I do is I move down my lower time frame and I look for a strategy, whether it's going to be FX Market Fusion, whether it's going to be on Right Trader Max, point of whatever strategy, point of figure, it doesn't matter. You're looking for signals that are going to give you a sell opportunity. Now, if I look at this is the 1 hour time frame. I can knock it down to a 15-minute time frame, depending how I want to trade the market. And you can see here at the open of the week, this is the open of the week right here. And so this week so far, I haven't seen any bearish signal this week. And as soon as I start getting, oh, my bad, there is a bearish signal right here. So we've already had a bearish signal on the 15-minute time frame. So already on the 15, on this particular currency pair right here, it's telling me start selling. And so I will fall, to go back to your question, Tyson, I will fall back on the rules that I have for the strategy. What is the rules of the strategy based on profit taking? And it would probably be a 1 to 2 risk reward or 1 to 3 risk reward. So which means that wherever my entry point is and my stops at, in this case now my entry point would be right about here. There it is right there at the top. So I'm looking at about 68 to 55 is my entry point. My stop loss will be above the high or even the ATR distance, which, by the way, if you want to get the exact numbers, 47 pips. So we're looking at placing that 47 pip target, and we're looking at about a 97, 94 pip profit on this, depending on, of course, how much extra you want to put over that stop. So you're looking at a 94 pip profit target. So that would be my target from there. 94 pips down would put me down here. If we're going to get a price on that, let's just do that. So my price on that would be 90. Oops, I got to give it more. Hold on. So we're looking at 94 from here all the way down. There it is there. So we're looking at a price of around about 67, 61, which is right about here. 67, 61 right here. That is the target. Now, 67, 61. We go back to the larger time frame. Take a look and see where that target is. 67, 61. Check it out. It's just before this big support level that we've got right here on the previous high. So that's perfect. So selling here at the top or having multiple sells here, looking for price to come back to retest the support would be ideal situation on the Aussie Swiss. And that gives you now time, Tyson, to say, hey, do I really want to go ahead and sell the market at the support level? Or do you now want to start looking for some buy opportunities? Well, go back to the filter. If the currency strength dashboard says, hey, buy, 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 then start buying it back up to the top of the channel right here, or whatever that target identifies on that strategy that you trade in. Does that make sense to Tyson?
Yeah, it does actually. I think we're so you like, I like the dashboards telling you the sell side. You want to sell near that 69 level or so. I'm a buyer for the next couple days, but not long term. So I think we could pop up to that 69 level. So we're both kind of talking the same language, where I just want to buy for a little bit, not a long term. Then it'll set up likely for that next sell down. So as I'm looking to buy and make some money on the upside, you can be patient, waiting for that upside move to happen. I'll profit from that, and then hopefully we can both make some money on the flush down. I like it.
Yeah, and the Aussie Swiss was actually very similar. Aussie Swiss, CAD Swiss, Euro Swiss flush down as well. Pound Swiss, like all the Swiss pairs last week. I don't remember if it wasn't like I don't think it was a rate decision from Swiss National Bank. It was kind of, Tyson, we had like that pretty strong gap down in the U.S. markets. But stocks rebounded, and the Swiss did not. So I mean, we essentially we're allowing.
We went shopping.
Right. So you and I were doing some bottom fishing, if you will, with like finding some stocks we really want to own at a discount. Stocks recovered, ended up making new highs in the S&P and the Nasdaq. But the currency pairs like the Swiss with that really big flush. I mean, I'm a buyer with Tyson in the short term. Like I'm long CAD Swiss, I'm long Aussie Swiss, I'm long dollar Swiss and New Zealand Swiss to try to get some of that that candle to really fill back up. And it's not much. It might be like another 20 to 30 pips. But for that kind of basket trade, it's something that would probably grab me about 100 pips total on that Swiss franc move. And then I just like I'll probably be out. I'm not really overly bearish as far as like wanting to sell the Aussie Swiss or those pairs back down because if we have low volatility, one thing that is really expensive, well, maybe expensive is not the right word, but when it comes to rollover and carry and financing charges, if you're holding Swiss long, that's the worst possible carry trade in the Forex land, right? It's negative 0.75 in favoring Swiss franc strength, and everything else at least has 0 to 0.25 or some fraction of an interest rate versus the Swiss. But it's all bad. Like it's the race to the bottom. It's all 0% for the most part. Even though, like Gary said, we have big news this week. We have RBNZ rate decision. RBNZ this week rate decision and BOC rate decision? Yep. So we have 2 rate decisions. We have Bank of Japan rate decision. And again, none of them are expected to change. I don't think the market's going to be overly surprised, but there's always, some volatility around the statement, the press conference, and we look to see what price does overnight. The RBNZ is at 10 p.m. Eastern time. The BOC is at 10 a.m. Eastern time the following day. So, there's going to be a solid, 2 to 3 days this week, like Tuesday through Thursday. I would expect there to be some volatility around the the New Zealand dollar, the CAD, and the JPY. So if you're looking for some news and some currencies to be on the move this week based on news, those would be the 3 that I follow.
And just to add the last thing on this, the Aussie Swiss, which is so fantastic, it's unbelievable how the charts tell you something before it actually happens. And we've been talking about divergence for a while. And if you actually look at this setup right here, and it's happened on quite a few currency pairs last week. We spoke about it, how the market created these divergences on the daily time frame. And all we were doing is waiting for the market to take out the major low. And then when it did, the divergence took off. And this is it right here. Every time you see an oscillator move below and into an oversold condition and price is moving up, this is creating an opportunity. And the opportunity, what it's creating is that price is going to take out this low right here. So when we do see a sell-off, the best place to start buying again is when price takes out that low. So when price takes out the low, which again, we would probably head down to that support, and the oscillator stays above the overbought level right here and creates a bullish oscillator with a bearish move on price, then you can expect the market to turn around and head in the opposite side very quickly. And that's where you want to get ready, start buying on those dips. Anything bullish on any sort of strategy that you follow, you want to climb in on that because you're going to miss out. If you don't, you're going to miss out that big run, the quick run. It's going to be one big bullish day that you're going to miss out on. And traders are going to try and jump in on the day after, and that's where they're going to get beat up. So these are the things that you need to look out for.
So Tyson, what do you have? So short term, it sounds like you're along the same lines as me, like some of those Swiss pairs short term bullish right now, just to kind of take it back to some of those. I know you like supply levels.
It's the week play. And so just for this week, using kind of money flow filters and patterns, looking for a bullish pop. We're starting to get it right now. Don't think it's going to move in a straight line, but I think being more of a bull Aussie Swiss for this week is good. But I think it's a bull into a bear, like Gary said. So I think it's a bullish move into that bearish move that Gary's looking for. So I like that. I also like the pound Aussie short. Same type of philosophy on pound Aussie just this week. To the downside. I think the weakness to the downside is going to be followed up by some nice strength to the upside. But I think for this week, looking at this level of resistance that we're sitting at right now, we're bumping along. Wouldn't be shocked if we don't get a couple week push lower, followed by that next nice rally higher. So this week, if I'm just talking this week, I'm looking for some weakness in the pound Aussie. And so essentially that kind of goes back to, the way that my mind always thinks is we just talked about Aussie Swiss long, buying the Aussie, selling the Swiss. And we talked about pound selling off Aussie strength. So it makes me say, okay, I'm looking for Aussie strength. I wonder out of those two, buying the pound Aussie selling the pound Aussie or buying the Aussie Swiss, which one's better? So real fast, if we look at, I want to make a decision. If I look at the pound Swiss, if I can get some type of bias on that, I could say, let's say the pound Swiss is looking bullish. Well, that means the Swiss is looking more bearish. I should buy the Aussie Swiss. And I know that kind of makes is rapid in circles, but essentially I'm looking for Aussie strength. I just want to know what to buy the Aussie against. Do I buy it against, do I sell the pounds or do I sell the Swiss? That's what I want to decide. So, and I like both. Right now I'm swaying more towards the Aussie Swiss than the pound Aussie, but I like both trades.
Yeah, I'm just, as you say that, I'm looking at the pound Swiss right now, and there's a pretty solid, Gary, if you just want to click on the pound Swiss, there's a pretty solid support level, at 25.75. And
again, the reason I'm looking at that, guys, is because, again, we're looking for Aussie strength.
Yep.
I think the pound and the Swiss are both going to be weak. All I'm trying to figure out is which one's going to, out of those two, which one's going to be weaker.
I think I'm trying to answer the question. I think the Swiss was going to be the weaker of the two for this week, in my opinion.
So do I. Yeah. So buying Aussie Swiss goes back to my Aussie Swiss, but I think both trades are good. So that's kind of my favorite play for this week, and I think it's going to be a short-lived play, but I think it'll be good for this week.
Yeah, no, I like that. What do you? Let's talk gold. Let's talk gold, silver really quickly. I mean, if I look at technicals, and Gary, you got the screen and it's clear for everybody watching, so maybe you can just run with it. Yeah. So, gold. I think silver is the better play technically. I think silver makes a lot more sense. I'm really bullish at silver. $21, $22 support. I'm stuck. I'm not stuck. I'm just holding. I'm just holding at $22 long silver, long SLV, long WPM. But like if I'm looking at the correlation, I don't know if we have dollar strength continuing to float higher. It's interesting, Tyson. I know you and I talked over the weekend, looking at a little video with Kathy Wood and ARK Investments, and this deflation play. And you and I, and actually all of us, when we started trading in 2021, what was our big play on the dollar? All three of us. What direction did we plan on trading the dollar?
Bullish.
All of us are bullish.
Yep.
Everybody else was talking about bearish dollars. They printed too much money. We're going in, dollar. There's too many dollars out there. The dollar's going to get crushed. It's going to lose its world reserve currency status, blah, 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 blah. Look, we were in the alignment of the technicals and the fundamentals of it's an overcrowded trade. Technically, it's sitting at multi-year lows. It's sitting after a 5 or 6 month trend. Traders need to understand that these market moves in waves, right? And so the dollar index was a great play to be long. It was a little bit scary because, we had a 5 or 6 month strong downtrend from 2020 into 2021. Nevertheless, the reason I'm talking about gold and silver is if we're going to see the dollar continue to stay bid and continue to stay firm, I see commodities cooling off and selling off because, lumber has settled back down. Copper has settled back down. China pork prices have settled back down. Like all these crazy commodity prices that were going nuts like two or three months ago have now cooled back down and settled off, and the dollar has remained bid. So like I said, technically I think dollar index looks decent. Now Gary's got it mapped out perfectly where that that 11,800 level is strong support, but I'm wondering, Gary, if we might not even get back there. We might see that the FOMC direction that was established on that breakout around 11,760, that breakout, we might just see the dollar index stay bid, keep going for a higher high before we have some type of rising wedge, and then the dollar maybe comes back down. So as it stands right now, and I've been bullish on the dollar, especially on a handful of currency pairs. Dollar CAD, I'm still bullish. Dollar Swiss, I'm still bullish. Okay, Aussie dollar, New Zealand dollar, I was in a lot of positions on those, and so as they stand, I'm out of them and just kind of waiting for better clarity. But dollar CAD, dollar Swiss, I still like. I think that traders have killed it on the euro dollar, they've killed it on the pound dollar, and so again, I think the dollar stays pretty firm. Silver, I'd still buy at 21. Gold, I'm wondering, does gold flush back down? We have kind of an awkward channel on gold, but I think the dollar index stays bullish for right now. Even if we pull back to that support level Gary has at 11,830, I still see that as a strong support level, possibly 11,800. But I just still see the dollar maintaining bid.
Yeah, I look at this, if I can jump in, I look at this again and I'll say, hey, look for the signs, because that's really where we're at. And what are the signs we really look for when we're looking for an idea of what the market's going to do? And it's always comes back down to divergence. Divergence is a very key forward indicator or predictive indicator to tell us what the market's trying to do. Now, obviously, we still need to break through these key levels of support and resistance levels, right? And so when I look at the dollar right here, I look at the dollar and I say, okay, do I see any sort of divergence here? Well, look at the oscillator. Oscillator went in a very overbought condition right here, and we created a new high. So what happens when we have this is price and momentum moving in opposite directions. We normally see a sell-off. Then I go back to my technicals again. I say, okay, well, if this is a technical move, how would the technical move? And this is how I read it. I read it as price moves in waves, just like you said, Chris. And this is wave 1 right here. Then we have wave 2. And wave 2 is up here. And we didn't quite get to the 1.27, which is normally where my expected fifth wave is. Right. Now, whether it hit it or whether it did not means that we could be heading into a irregular flat, or we could be chasing after a fourth wave that was created, and this was the fifth wave right here. So either way, this level becomes significant. And I remember I told you about the other currency, the Aussie. I said if it trades below this, it most inevitably is chasing after this low right here. And so in this pattern, it tells me that we're either heading into a fourth wave move, or we're looking for a fourth wave correction move that's still going to create a low below this, that's going to head into what we call an irregular flat. And if that happens, when we take out that low right here at 11,831, that is where I'm looking to be strong bullish, because then I'm looking for the market to chase after those highs again. So right now, what I've done with my positions, and I told you I was in on the US dollar Canadian, and I'm not in the money on that, but I've got quite a bit of positions on some of those positions. But what I'm starting to do right now, I'm starting to cash out on other positions to give me more liquidity, because when price goes in, if I'm long, all right, and price just rallies up, and we see dollar strength, no problem. I'm going to make money on my my Canadian dollar, US dollar Canadian. But if the market does go ahead and we see a weaker dollar and it drops back down here, I know when we take out the lows right here, I want to have enough ammunition to get back in again and start driving some buyers hard on this, because when we go and turn around right here, that's where the money's at. That's where the spot money's going to be at. And that's where I want to be at. So I'm actually right now on the US dollar Canadian, looking at the dollar index and how it's set up. I'm positioning myself to get ready for the next big move. And if it means a dip before the rally, then I'm going to be prepared for that. So I've got enough, workers to jump in again and get that price push back up again.
Yeah, nice. I'm calling out a level. I mean, traders in my room last week, the Flex room, they killed it. I mean, now granted, we've been in the dollar CAD for a while. We've been starting to position ourselves in since like 2100, 1.20. We added a lot to our winning trades over the last couple of months. Dollar CAD, I am still bullish on until we start to hit 2600. I think that's at least a level that I'm going to expect the bulls to get to. I know, Gary, you had that 127 extension up there that was just past the dollar index as well. But dollar CAD, I at least want to see 2600. Gary, if you have the right trader indicators handy on your workspace, could you show that? Could you go to the daily chart?
Absolutely.
Perfect. So take a look at that purple line. That's what I've been after for the last several months. Right there. As soon as we had that capitulation move to the downside, when the dollar CAD was selling off from 2,400 all the way down to 1.20, we started to load up and get, again, testing the levels, breaking trend lines, falling wedge, equal lows, and then the bull started to take back over. So essentially from 2,100 to present, we have been all bullish. And so I still think there is fuel in this move. No pun intended, because I've been watching oil a lot. But I think the dollar CAD is heading towards 2607, 2600. That's the line that I'm after. So any pullbacks on dollar CAD, I'm looking to level back in and buy more. So I cleared 17 positions of bullishness, took a lot of profit. I'm looking to get back in. I'm just now spacing myself out just in case it falls. I kind of hope it does. If it doesn't, though, I'll still be. If I miss a little bit, I miss it. But I'm happy on 17, 18 positions that were long, close to the profit. But if I can get more, I will definitely get it.
Well, that's the level right there, Chris. This level is, if price stays, and if you're a trader writes to write down numbers, write down this bearish and below. I'm going to go ahead and say bearish below. Oh, bearish below. So I'm going to go ahead and add that in here. And so this level right here, 124.80. If we stay below 124.80. Then there's a good possibility that we're going to chase after this low down here before we see a nice little rally, and that's 22.48. So at 22.48, I'm going to be a buyer. This is going to be what we call my buy zone right here. the buy zone right here. So I get ready for these levels, and these are so key. This is so important to see these levels. And look at the divergence here again. Look at the momentum down, and look at price going up. We're expecting price to come back down again. Take out the low right here at 22.47. Turn around to hit back up north. So, Chris, if we don't get to the 26 initially, and it goes down to 22.47. That's going to be a key level to start buying back in the game to chase after that 26 level. Because I agree, we'll get to 26.
I agree, and I mean, how nice would it be if this trade not only offered the last couple of months of bullishness and profits, but also we've taken profit. Now we can potentially reload and get back in and do it all over again for another 300 to 400 pips of bullishness. So I'm liking it.
Yeah, fundamentally too, guys. Fundamentally speaking, I love this setup buying near that 22.50 to 23 level too, because we're going into earnings season, and we got to remember, money is circular. It goes someplace, right? If I get out of the dollar, I've got to put it into something else. I think we're going to see what this earnings season is kind of positioning for is as good as it gets, because growth rates are going to be huge. We're going to see numbers that we've never seen before, year over year. Just and it's going to blow people's minds. And smart money knows this. And I think that what they're going to do is they're going to start positioning aggressively long. And we're going to see a big rally in the markets. But I want everybody to think about this. As good as it gets, what follows as good as it gets? Not as good, right?
Yeah,
not as
almost
good.
As good. Almost as good, maybe.
What I'm saying is money's going to come out of the dollar into risk assets, push us down to 122.50, and it's going to say, then they're going to say, wow, we made a bunch of money in stocks, and we're going to see lumber rally back up again, maybe not to 1,600, but probably over 1,000 again. And then people are going to be like, oh man, Q3 is probably not going to be as good. Okay, let's start. That's when we're going to see safety come back in, and I think that's going to be the next huge leg in the dollar up. Yeah. So I think the setup is this. You sell dollars, you buy stocks, you buy risk on right now, Aussies, New Zealand's, CADs, all that, buy risk on right now for the next probably month or so into August, mid-August. And Chris, that's when we start to look for puts. That's when we start to aggressively go into long the yen and long the dollar pairs in my mind.
I like it. I think that I was just going to say, I wanted to tie this back into, overall stock market. Right now it is the path of least resistance. The market doesn't like anything more than a couple of percent to the downside. If the market's 2-3% down, it's violently buying those dips. And, Tyson, you and I are looking at, again, I know Gary would say, look at the technicals. Gary, take your right trader chart and type in QQQ. Take a look at the QQQ on your right trader chart. So technically speaking, and this is why I say technically speaking, because fundamentally things are going to have to align and things are going to have to happen for this trade to come to fruition. Okay. So I am looking for it. And here's what's going to be interesting about the way Tyson and I position this in our equities on demand class. Tyson, basically it's this. If it's the path of least resistance right now and it just stays bullish, keeps drifting higher, you and I towards the end of July are just going to be like, it is time just to take a chance on this thing dropping and cratering quickly. Right. Exactly. So basically, if the move happens right now, I don't know how aggressive I'm going to be on following it or chasing it. But if it's there by the end of the month and we start to transition into August, I'm going to take a chance thinking that August is going to be an ugly transitional month. Possibly August into September could be some violent corrections that are necessary. And so when I asked Gary to put that chart up, Gary, I'm just looking at the bar count from the balance of your right trader system to that purple line. We've gone over 300 and some bars since the last time that was touched. We've actually gone a year and a half without having a technically balanced trend with this system. So all I'm looking for is, I call it my reversion trade, but we're at what, 316? Yeah, 316 bars when we haven't really had any balance. And at first I thought we were forming a rising wedge near the top that's broken out of those levels. This last move, if you look at that last leg up, it's essentially, to me, had every indication of a capitulation move. Very little pullbacks, mostly to the upside, mostly drifting. This is what Tyson and I have seen. This is where tops really start to form. A capitulation move that's very one-sided. It seems like it's low volume, not a lot of participants to drag it down, but it's going to be fast. And so, calculation-wise, we're looking at about an 8 to 10, maybe even 12% sell-off, which again, in the grand scheme of wave cycles, in the grand scheme of the stock market, an 8 to 10% correction is just a correction. It doesn't have to be full-on bear territory. But what's interesting about today's market is we don't have just healthy market cycles. We have parabolic extremes where it has to go until it's like historical highs, and nothing can stop it, to then it crashes within 1 or 2 weeks. And so that's what we're looking at, is like, if this thing is still drifting higher and stretching into these July highs and keeps going, I'm going to look to sell it by the end of the month or early August and expect this to drop very quickly over a couple of week period. And you can see this done it. I mean, look at the COVID low. Look at these red flush downs. Those are all like 8, 10, 12+% corrections. And they happen within about a 12 to 13 day period. So that's only a couple weeks of trading. But man, we can make a lot of profits if we can somehow get that timing right. And I know Tyson and I will do that with options in the next probably 3-4 weeks.
Wow, guys! Wow, this is so exciting for me, because I definitely want to get in on the action, because when I go to the daily time frame and I just look at the wave cycles, and we have only got so much data, but looking at the wave cycles, we had that big strong rally, and then we had a dip, which is a standard thing in a second wave move. Then we had that big sharp rally all the way to the 1.6 pullback, and now we're overextended, which means that we're at a point where you got these sub moves, these sub waves right here, and there it is, wave 1, 2, 3, 4, 5. This tells me, just like you've been saying, Chris, this is going to sell off, and guess what? It's going to chase after the lows down here at about 256. So
wow, that's a big move, man. Like,
yeah,
that's a big. So I'm going to use that number, Gary. I'm going to use that number to 256, and Chris, I want to see what that correction. Yeah,
Chris,
go ahead.
Who was it that called out a 40% sell-off within the next 2 years a couple weeks ago?
Tyson, that was like pretty much your prediction all year, man.
I don't know when it's going to happen, but we're going to see I'm convinced the timing is going to have to be key. And how do we get that? When we get to wave 5, when we get to capitulation, when we're above a median price for 350, 400 days, that's when it's like, okay, you got to think, whoever wanted to buy has already probably bought. That leaves what? It leaves sellers.
Yep.
Yeah.
So
it's a lot of money to be made,
and
guys.
That's why I just want to.
And it's going to support the dollar trade that you guys just talked about too.
And that's why I wanted to say that, look, technically we are anticipating this with the clues that we have, right? Gary's got the wave counts. I've got the indicators. We've got conditions. Fundamentally, it makes sense as well. But here's what we never know. We don't know what headlines you're going to read in 3 weeks. We don't know what the market's going to have to, believe and have this narrative out there that you see on Bloomberg and that you see on MarketWatch, and you see all, like, where's it going to be so ugly and nasty that it justifies why the market's dropping so quickly? It doesn't matter. What you need to understand is that if this is going to happen, you're not going to be surprised when it does start to happen. And furthermore, you know how to take profit when it is happening. So whether the market is going up or down, we can still make profits. Whether the market is moving fast or slow, we can still make profits. And that's why we're here. This is what we do.
Well, this is really good. This is a really good setup, man. The more and more I look at this, the more excited I get about this, because it's actually giving everything we need. It's got the fifth wave cycle. It's got the inside wave structure that we have right here that's giving us this internal rising wedge. We call it an Indian diagonal in this form of a fifth wave confirmation. We see the oscillator over here formed a high right here, and then we saw price moving higher. There's everything screaming out this. Where's my board? I have to do this, man.
Uh-oh.
Where's my board?
You know what's coming, Tyson.
Yeah, it's definitely coming, and it's what is it? Let's see here. It's there. It is. Sell.
Very nice.
Got it. It's
nice.
got to be. No, I don't want to be cheesy in that, but I'll tell you something. It is a sell. It is a sell. I like it. I like it a lot. And Chris, I might even have a conversation after the session with you regarding that, to get a picture of this action.
Yeah,
because
there's a handful of ways Tyson and I are talking about trading it and playing it. Like I said, the hardest part right now is that it's still summer. I don't see a lot of disruption right now over the next probably 2-3 weeks. But as we transition into August, we've already looked back historical evidence to see the same thing. The bar count is great. The wave count is great. The de-extension, the capitulation, technically, all the clues are there. I just don't know what the headlines are going to look like, but I don't care, because I know that we can get these type of trades in probably before it even happens. And that's what makes it kind of exciting, is we're willing to take a calculated risk. And if we are right, Tyson, you and I both know, if we are right, man, we can be very profitable on
Well,
on this move.
let's do this, Chris. Let us put our minds together this week and put together a game plan of exactly how we're going to take advantage of this move,
Yeah.
and even start what the process we're going to start, and bring it back to our AAA session next week
Sure.
for the guys to join us next week. So make sure you guys join us next week for the reveal of the game plan on QQQ on how we're going to trade this, and Tyson and Chris will come up with a good suggestion on how to be able to put
We've
this.
got some good ideas already, and it's going to be a risk less type of way to do it, where we can make money. Even if we're wrong on the bear side, we can still make money.
Yep.
We'll talk about that next week.
And this will also influence currencies. So, I mean, you might be, if you're a full-on Forex trader and you're looking at this, you're like, well, I don't trade the stock market. I don't trade the Qs. This will impact the volatility that you see in the Forex market. So you do want to pay attention to this, because there is a strong correlation with these risk-off and risk-on type movements. So it's going to be awesome. So come back next week. Any final words, Tyson, Gary? Any final words for today? Nice to be back. All three of us. It's been fun.
Yeah, that's the first thing. I agree, Chris. It's nice to be back, and we definitely got a lot of good things coming up over the next couple of weeks that we're going to be changing up and spicing it up a little bit here in the AAA session. I think we even possibly even change the name. That's how crazy we're going to get. But the thing is this: we're definitely going to stay more focused on how can we take 28 currency pairs. I'm talking more and referencing more on the currency side. How are we going to take 28 currency pairs, filter it down to focus on 2 or 3 of those pairs for the week and make profit? Because if you think about it, you don't have to trade 28 currency pairs to make a good rate of return. Right. Trade 1 or 2 currency pairs. If you're making 1% per week, that is 4% per month. That's still a good return. You're looking at 48% for the year. A great return. Don't chase after a huge profits every single month, because you're going to put pressure on yourself. It's just going to be unpleasant to trade. But if you set good, realistic targets each and every week, each and every month, each and every year, you can be able to reach them, find trading exciting, and want to come back to the trading table every single week. So that's going to be my sort of like thing for 2021, or at least what's the rest of 2021.
Yeah, I 100% agree. I'm excited about us getting back together. I think what I love hearing is that we're on the same page. There's going to be times when we take, actually, you know what? We did have a little bit of a differing view this week, kind of, but I'm looking for a rally in the Aussie Swiss followed by a sell-off. Gary's going to be patient and just look for that high price to sell. So we're kind of saying the same thing, just looking at it in a little bit of a different way. But yeah, it's a lot of great moves to happen too. And one big takeaway for everybody is just find the formula that works for you and stick with it.
Absolutely.
Yep. And Chris, you're going to be in a battle with Tad and Tion coming up in the next couple of weeks.
Yes, we will be battling officially on the 27th of this month. So we're going to basically, we initially talked about doing a one-day battle, but look, we're not going to force trades that don't perhaps have a lot of news for that particular day, or maybe a lack of volatility for one individual day. So what we're going to do instead is we're going to trade the entire week, the 26th through the 30th, to close out the month. And it's going to be Tion Crick, Tad Devan, myself, and it is, may the best trader win. We set some rules. We have to trade the same instruments. We're all trading currency pairs. We have to set the same trade size, and we're essentially using the same directional bias. So it's really who can perform, who wants to be the most aggressive, who wants to be, protecting profits. I suppose let profits run for the week, or maybe be more aggressive day by day. But it's going to be a lot of fun. You're going to have kind of 3 unique takes on, look, weekly trading. Try to find some opportunities for a Monday, take profit and trade all week, and who wins? May the best trader win on Friday. So looking forward to it.
Different strategies. Different strategies.
Yep. Directional bias, similarities, but different strategies, our go-to strategies, how we can, do our best to win the week. Yep.
Perfect.
So coming up a couple weeks.
All right.
So if that's it, I'll go. I mean, we can officially give a sign off and salutations. Thanks for being with us today, everybody, on AAA. We'll be back at it. Whether we change the name or not, we'll let you know. But it's Tyson, Gary, myself, and anyone else on behalf of Market Traders Institute. Thanks for being with us today, and we'll see you real soon. Take care. Bye.